Hello everyone, very good morning. Welcome to the expiry day trading. It's going to be a fantastic day. Market has given up a good momentum on the upside and it's continuing in line with our predictions yesterday. So both both the indexes have opened up with good gap up. Let's see how this gap sustains in the first 5 minutes, and if it continues to ascend, then we should see market making the round figure, which is 49. Uh, Bank Nifty will take some time to reach 49K, but Nifty is on march to 22K. Just do let me know if you are able to hear me. Just say yes in the comment section. Markets opened up. Small pullback. will it sustain the gap? It's not even no coming down pretty fast. It's holding up around this level. Both the indexes are holding up. Maybe I can switch to 5 minutes time frame. That will give a lot more details to the chart. Okay, here we go. Mhm. So 5 minutes candle ended up, and next candle we got to see. Is it going to be green or red? The ascent is on. Full recovery. Wow, that's a full recovery on Bank Nifty. Nifty is clearly bullish since yesterday. Uh, Nifty will not have any issues going forward, but then since it's an expiry, just watch out for the volumes that you play in. Very important that you maintain a very good, healthy volume in case if the market comes down pretty fast, then all the gains will be lost. So be mindful of that. All right. Uh, Hi, very good morning, Anand. Captured 26 points in the small 2 minutes. Excellent, excellent. That's cool. Yeah, that's it. Book small profits and then get out of the trade. Markets will always offer us some good opportunities. It's about taking these small profits, getting into that positive mindset, and that's more important at this point. Uh, Say that you are able to capture 20 points and again 20 points. Some two trades that you could do small, then if you look at it, you have captured some 40 points, 50 points. Then you can wait for some right opportunities. Suppose the market comes down pretty fast at 9 EMA and all this, then that will be a good opportunity for us to re-enter. And we can re-enter with a lot of confidence because you have that money with you, right? Like you have booked already 50 points in the opening because of the gamma effect. The gamma effect will be seen today. Extreme gamma effects will be there on both the sides. For any small moves, the premiums will jump in. So you should be able to capture those sort of points and just stay away and wait for the right moment to trigger in. So yeah. Now with this small move, you can see what happened to your premium, right? Like from the high that it has made, it would have fallen significantly. They remember this is expiry day. Don't get carried away with this large candles. As much as it goes up, you can also see a strong red candle, and if that happens, then you will be in deep trouble. So size your positions right. Wait for the right opportunities. Even I got in. I played in Nifty. I was able to just take some positions when the market peaked over here. So I did writing of puts, so was able to capture this move. So anyone else have taken any position? How is it all going? The opening trade? Have you guys done some booking? Okay, here is one thing that you should keep in mind. As an option buyer trading on an expiry day, one of the first thing is you should have fear and use that fear to your advantage, right? Um, Whatever be the price, whether you're playing in Nifty or Bank Nifty, whatever is the at the money strikes, you look at it, and say to yourself, by the end of the day, this is going to become zero, right? Ultimately, that's the truth. At least if there is any sort of continued rally aggressively, then it becomes deep ITM. Then you will not find that. Otherwise, most of the strikes, almost all of it, is going to become zero, except for the ITM strikes. Now, currently we are in the opening trade, and then right now it is at the money. By the end of the day, you don't know it is at the money, it is going to be at the money or ITM, or it is going to be OTM. So there is a strong potential for it to become zero. Keep that in mind. If you're going to deploy even 100 quantities, whatever is the value of it, end of the day, it's going to become zero. Is that loss acceptable? If that loss is not acceptable, then don't size it that way. It's going to cost you. First thing is, be rational. Even if the market is staying at the same levels, like here itself, for next 20 minutes, the strikes will lose by like 40% of its 30% to 40% will be easily wiped off. 100 rupees will become 70 rupees, 65 rupees, like that. So why should I pay 100 rupees and then take it here on an expiry day? Is it okay to accept 100 becoming zero or 65 becoming zero? Ask yourself that. Buy to the cheapest price of the day, as close as to that possibly. Then you can ride on with your opening trade. If the opening trade is the risk that you're taking, since it's paid you, you should wait for right opportunities and then re-enter later. Look at this over here. The second candle is red, but here it's still green, right? So is the index going to be divergence? Is Bank Nifty going to pull the Nifty down, or Nifty is going to boost Bank Nifty up? We have no idea. The speed at which Bank Nifty is coming down is the same speed at which Nifty is going up. So some sort of divergence is there, but then this divergence can be quickly corrected if Nifty decides to fall in one go, right? So wait. Right now the opening trade is done 9:45 to 9:50. Between that time, I usually send some opportunities. I see that the index comes towards this 9 EMA and 20 EMA around that time. Then at that point we can make a well-informed decision. So no trades for next 10-15 minutes. No big deal. Path has not taken anything. He says he should have held that straddle overnight. See, if you're taking the straddle of month-end contracts or next week contract, that's okay to hold. But current week expiry, if it opens flat, both the sides you will lose money path. So if you have played it in current week expiry, perfect that you closed it. No regrets. But if you are doing it in, say, next month-end contract, hardly there will be any sort of decay. You could have continued to hold. If you want to know what could happen, just take any at the money strikes of any index, like Bank Nifty or Nifty, whatever is your comfort. Check what is the price right now, and then see what is the price at 9:45. You'll be surprised. You'll be so shocked. Any at the money strikes. For example, Bank Nifty is at 204, 205 right now. Take it at 950. Cool. Cool Dream says that he has covered 49,000 PE, Jan expiry, 30 points covered. Fantastic. Fantastic. Now, I mean, if at all you're holding puts, what Cool Dream has done there is fantastic. You should be always going for the farthest possible um, ITM puts, because that's the only thing that will not lose money by market being stagnant. Even next week expiry, if market stays here, it's like wiping off like anything. For example, let's say a call option is at 10 rupees and put option is at let's say, okay, 50 rupees. Call option is at 50 rupees and put option is at say 30 rupees. Okay, if there is any sort of upside move from 50, this becomes 75, but the 30 rupees immediately comes down below 10 rupees and never recovers through the day. That's it, it's over. It is not recovering at all. Even if there is any fall, it won't recover. Maybe from 10 rupees, it will go to 12 rupees, 13. But the call option from 75 rupees would come down to 30 rupees. So, if at all there is any sort of action that's happening in the premiums, it's only on the call side that it is responding properly in near term expiries. If you're talking about distant expiries, then puts respond pretty well. No doubts. But you should go really far off, and the premiums would be a bit on the higher side. If you're paying ITM strikes, say 49,000 PE has taken month end contract. So what is it trading? Let's have a quick look at it. 49,000. So 49,000 is trading around 984 rupees, right? Now this is the kind of premium that you got to pay, 984 rupees per lot. But it's worth it. It's worth it because your money is at least safe. You don't have to close, and you can use that. If you're a writer, you can use that ITM for many different reasons. So tremendous benefits are there. People will think that it's crazy to go and then buy 900 rupees per lot, but it's not. Not definitely one of the smart decisions. Good job there, Cool Dream. Now look at the premiums. Premiums of calls are coming down, and Nifty has also like changed its course now. Fully taken. This full length candle is taken now. This will offer a support, but then since 9 EMA is here, I think this fall should extend till the levels of 9 EMA. Don't think this is the cheapest premium. Still 6 minutes left. You will be amazed to see at 9:45 what are the premiums. So with this move, the premiums will be jumping, and don't get into this market buy all these things, because it's going to trap you. It's going to trap you at an expensive price. Wait for really good length of time. Last week, if you guys remember, in Nifty, I was looking at a call option. It was trading at 134 rupees. High was 134. I was in the opening, it was at 104. It went to 134. Then 9:45. You know what was the price? 31 rupees. Okay, so and then it went back to 100 rupees later part of the day. That's a different story. So all I'm saying is that you'll be shocked to see how much of erosion can happen in just 6 minutes of time. Either this 9 EMA should move up or this should quickly come and touch this 9 EMA. That will be my entry. Same with Nifty. Oh, wow. Firing up, but I still would wait. Because it will become crazy expensive to buy over here. Either buy something, my logic is either wait for it to buy something around this 9 EMA or let it make its peak and then you can do some sort of, call writing, but nothing in between. It's always a risky thing to do. Yesterday there was a fabulous move in the second half. I missed it. I said I'm done for the day, so I didn't do any trading. But then later I was checking a strike 21 750 strike, which I was using for edging purpose, was at around 9 rupees. 9 rupees when the market collapsed, the call side I'm talking about. And it ended at 36 rupees. So 4 times it just jumped. That's the effect of month end contracts. Gamma effect will be massive. So any sort of price movements will be absolutely crazy. You will see uh, market reacting extremely volatile on these days. So be careful. If it's on the favoring side, that's fine. You need to trail it and then max it. But if it goes against, you're in deep trouble. Now you can see the market has come back to the same levels as the I, but look at the premiums. It has not retraced back to the original level. So very far away from the high it has made. That is erosion. 945 right now. But I think the premiums can still be cheaper. I am not going to get in till we see some 9 EMA testing. Until then, no trade for me. Even if it takes 2 hours, I'm not going to do. I think water can has come. Just a moment. So, welcome back. Nifty is moving super fast. Bank Nifty, okay, Bank Nifty also joined in. I think this is the opportunity that I would like. Hi Bhargav, very good morning. I would do some sort of writings now. For me, it's very clear. Either you go up or you come and test. So this entry I was waiting for, now I don't get that. I'll go for writing of calls. Because the premiums have appreciated. Now I'll do not current week because the gamma effect is against the writers. I don't want to have any effect. I'll go for distant expiries. Any trades taken, Bhargav? You got it. They made the premiums super expensive and then coming down pretty fast now. Almost they made a lot of people to buy at market value at the most expensive price. And once they have trapped enough number of people, you will see some sudden actions on the downside. So market is never a straight line. That's it. Look at this. Now what's the premium? They made everyone buy at a very expensive price. Coming down now. Oh, so rollovers will be happening today. Huge volumes. Huge volumes of rollovers will happen. This is not like any other expiries. People who are joining the stream should please note that this is not the regular expiry. Month-end expiries are a different beast altogether. The kind of volatility, the kind of you know crazy moves that can happen will certainly overwhelm you. And most logical thing is that whatever money that you can make before 11:30 as a buyer is all yours. After that, you don't know what will happen. You will never know what will happen. So if you are able to make 500 rupees by 11:30, take it and go home. 5,000, take it and go home. Whatever it is, just close that day as a buyer. Look at the speed at which the premiums are coming down now. That is my entry. Yeah, this is my entry. Awesome. Look at that. Now I was able to book it quite well. Absolutely stunning, isn't it? Did you see the premium crash that happened? How many of you found this one useful? Did you make use of it? Awesome. Awesome, Bhargav. Now this is the kind of entries that I wanted. No, I don't want to pay some, high premium and then do average later. I wanted to buy at a place where people will be averaging. That is exactly what our entry should be, and we got it, and then it's fantastic. So sometime back when this rally happened, I said I will wait for 9 EMA to come and touch. It didn't happen. It went up here. I said I'm going to write call options. Correct? And you see how rewarding it was. Again, wait for the premium crunch. The market will not just come at 9 EMA and return. It will stay at 9 EMA or even attempt to break 9 EMA. Then the premiums become super cheaper, right? So this trade is done. Just I don't want to really jump in now. Just slowly, just keep adding more and more legs and max your profits before 11:30. Then call it a day. Whatever happens. Say, for example, yesterday I said 9 rupees call option went to. I'm talking about Nifty call option. From 9 rupees, it went to 36 rupees. Market was still open. Obviously, I was having my lunch and then just checking it. It was like so shocked. Tempts you to again re-enter. But the thing is that if you re-enter, you will be in deep trouble. So once you call it a day, turn on something like Netflix. Get yourself completely hooked with that. Don't even look at it till you have that discipline of even if you look at the market and prices are moving and don't have the urge to place the order. Until then, engage yourself with something creative. Uh, Watch Netflix or any other play games, whatsoever. You have some friends, just go and hang out with them. Don't get back. So, did you guys check the premium? At 9:35, I said, look out the ATM strikes premium. What is the premium right now? This is the amount that you saved. Okay. If you had traded at that time, whatever is the difference, that much you consider that you have saved. Okay. Premiums are collapsing now. This is exactly where I said don't rush, because you could see how big the fall is now. Wow. Look at the crush, guys. Look at the crush. Whoa. This is absolute crushing, isn't it? I think I should now book that leg. Yeah, this is cool. I will exit this. I'm happy to book this. Hi, CSM 210417. Welcome. I think the water guy has now come. Just give me some 5 minutes. So, welcome back. So, see, with the premiums have crushed and then it's attempting to fill the gap now. So, this is very, very, very typical of month end expiries. That's why I said if you have not witnessed the kind of volatility, uh, you will be caught off by surprise. Then, whatever money that you are able to make, the first 2 hours, 15 minutes, that is all your money. If you're losing, then you should exit. Starting went to 180, now it at 30 rupees. Exactly, Anand. Exactly. You see how much? 70 percentage erosion then, right? 70 percentage erosion of premiums. Absolutely difficult to manage. One of the strikes in Nifty, which was trading around 60 rupees, is currently at 32 rupees. I'm talking about 750C, which was at the money at the time. Mhm. These sort of craziness do happen. In 20 EMA, now if you're entering here into a call, it is relatively better than entering anywhere in between. Hi Prithvi, very good morning. Any trades taken, Prithvi? Holding on to the C. Okay. Where did you enter in? So 48,600 at 105. And what is the current price? 100. Okay. When 48,676. Should have waited. I think if you had joined the stream, I was clearly saying that you got to wait. Premiums will be fluctuating. All the download I was giving some time back. You can hold. Maybe you can try some small average. Maybe some small quantities of averaging. Definitely, this is all like trying to trap people and then they will go up. But whatever it is, whether you are making profit or loss, 1 hour, 15 minutes, next 1 hour, 15 minutes is all the time that we got, and we should close the trades. Beyond which, holding is holding a lottery ticket. It can mostly go zero. Sometimes you win. Mhm. Bank Nifty is showing some sort of reversals now. See, look at this fall. It took support at 20 EMA, then pierced it, and then it became green. Then pierced it again, it became green. I mean, closed above 20 EMA, and this is clearly taken out. Now trying to break 9 EMA. So, which is all very typical indication of reversals. Should just see what happens in next 15 minutes. Premiums are getting crunched. Is it going to break 20 EMA? Then it is very serious. That's a good pullback. That's typically a good pullback. Yeah, premium decay is too high because of the rollovers and month-end contracts expiring. Uh, it won't be a typical expiry. That's what I said. Like every other expiry will have some sort of stability in the first half, but in this sort of expiries, month-end contracts expiring, then it should happen pretty fast. Even before you could realize everything will be done. Like not even realize how quick that things can happen. Now that's it. Excellent moves happened. Yes, month end and year end. That's right. Check. So CSM took Bank Nifty 48 300 CE at 242 237. What is it you're saying, CSM? Is it currently at 237 or what is it? 63 rupees now. See, don't do averaging in the current week itself, Prithvi. If you want to do some sort of averaging on the call side and want to maintain a bullish view and want to do an averaging, go for 25th January call options, buy it at cheapest price for the day, right? And if there is any sort of pullback, obviously this length of fall, and then I suspect that there will be a equal amount of recovery, but I don't know when it will happen. It can happen in next 10 minutes, or it can happen in the second half. But if you wait till the second half, whatever averaging you are doing, that leg will be trading at single digit. You will be losing big time. So if the trade goes wrong, terribly wrong, and then you wanted to do an average, switch to extend the contracts. Don't stay in the same contract. It's going to hurt. Okay. See, both the indexes are in bullish zone, no doubts about that. But then they will not give you any easy money. They will trap everyone like this with such a steep move, and then they will, when you least suspect it to go up, they will take it up. Having seen this sort of pattern, people would have related it with this one. I'll show you. Uh, Typical fall that happened a few days back, right? Like from here, market crash, right? People will relate to this because it's very recently that happened. People will remember this message very well, and they will exit. But then you see the rally that happened after, right? So typically, it may not happen on the very same day, but on the next day it can rally up. But today, being the expiry, if you have done some taken some positions and it has fallen, and you go on averaging it, it may not come today, but tomorrow it will come back, and then you will be like, it will gap open, and then you will be buying somewhere here. So why you are losing money on both the sides is also because you got to give yourself some time to be right. To be right, you got to give yourself some time. And today itself, everything has to work in your favor. That is where the market traps you. Maybe you have 1 lakh, you deployed some 30,000, another 30,000. Here it's another 40,000, and then it gets expired here. So your money is wiped off. Tomorrow, you know that the market is going up, but you don't have cash, right? Very typical story. Very typical story. Switch to 5 minutes. But honestly, around 9:30, if I said that market is going to go down, nobody would have believed. Nobody would have believed. I said wait for the premiums to become cheaper. Can you see how cheap it has become right now? Super cheap. So I will be checking to buy some next month end contract calls. This is super cheap now. Okay, taken. This is really cheap. You got to take this opportunity with some risk. Of course, market falling from here is the risk, but uh, then we got to change the view later. And at this point, I expect 20 EMA to be respected, and then it should be bouncing back. If it is breaking and then going down, then we should think of the view. So until then, I would hold a view that it should take some support at 20 EMA. Let's see. What happened, Prithvi? No, just don't get into this OP trade. OP trade is going to be really, really costing you big time. See if it is, have a view. What is your view? Is it bullish, bearish? Till where it is bullish, till where it is bearish. And if it is a no trade zone, then don't do anything. Don't average, don't do anything. So you got to have a view and play by the view. And if the view is not respected, then you got to change the view. You just look at the profit or loss, then we will never be able to make a sensible trade. Yeah. We will always be hurting. Trading here, it's trading exactly at 20 EMA. They're going to break that. The time will tell. Breaking below, but I would wait for the confirmation, which is for this 5 minutes candle to complete. Because sometimes when the 5 minute candle completes, it may even end up in green, and this will look like a spike. So people will be caught off guard. So don't want to really be on the wrong side just because see, now only it turned green. So this is a fantastic classic examples of how to trap the retailers. So big time traps are going on. Uh, Trust me, I have also taken a call based position, but I took somewhere over here. For me, it's not going to be a big loss. If the view is trailing, I will close the day with maybe no loss, no gain also, then call it a day. But if it recovers from here, from this level, then it's going to be very rewarding. So you got to know what is your game plan. Otherwise, we will only keep on hoping for our trades to go right, and that is usually going to be a big dent in the capital. A lot of people got cheated, I would say here. When it break, it was a false breakout. So remember, if you're, I said we should end the trade by 11:30. That's what I'm going to do. I'm going to end the trade by 11:30. And if I am expecting the market to go up, which I am already holding some positions, and say that I wanted to do some average, what is the time left? 45 minutes only left for me to close the trade, correct? So it's, which means I cannot be playing in current week expiry. I should at least play in next week expiry or next month end contract, whatever, but not certainly this week expiry. Okay, because one single blip, the erosion will be like crazy. I don't want anything to happen which wipes off my morning gains. So what I would love to do is to, if I am keeping a bullish view, I'll be switching something for the next week expiry or further of contracts, not current week contract. Okay, because I plan to exit in next 45 minutes. Whatever comes, I'm happy to take that home. Look at the sharp recovery over there. Both the indexes are showing some momentum. Now you can expect a crazy moves on the upside, very likely scenario. This is purely from what I've observed from the past, nothing to go with the data or anything, just that my pattern observations from the past. But I could go wrong. So, whatever it is, have some stop loss, have some exits, and averaging principles with you, and stick to that. Don't change anything. Don't, because just because the premiums are cheaper doesn't mean that you should buy extensively. Just lower down your position. Look at that moves, guys, coming. Got to play this. Very good discipline. So, one positive thing that you can take from here is that it's trading about 20 and 9 EMA right now. Both the indexes are trading above. That is one positive thing. And OI data is also saying, no, it has changed. One moment. Long build up on the call side. So there is a long build up on the call side, which is also a good thing. So let's see if we are in for any sort of swings. Mhm. Really, they are testing buyers' patience, uh, completely crushing the premium to the level that everybody is hoping that it should reverse, then making a U-turn again and again with all this, wick, long wicks, and then this red candle. The premiums are completely crushed of current week expiry. Pretty hard, pretty hard. Definitely, you got to think. Now this looks like for me trap setting for the put buyers. Uh, if at all they are going to reverse from here and then go up, then this is very good way to make everyone buy at inflated price. People will be buying puts at a very costly price, and very small moves the puts will start eroding, and then they will average. So all these things they are going to do to trap the put buyers. So remember, this is only the first half, and look at the kind of. Since I'm thinking of ending the stream soon, I will also give you certain warnings for the rest of the day. Please pay attention to this. Check out any recent times other than the expiries. If there was any day that you see this sort of move, and then the next one is turning red, and again bouncing back to the same levels, again crashing down, and then consolidating, and then you may see a pullback full length, right? So this sort of craziness is possible only on the month end contracts expiry, and this is well in the first half itself, very well in the first half itself. So what can happen potentially in the second half? Think about it. How risky things could be, right? So you got to keep that in mind and then play very carefully. If at all you are going to stay till the end of the day, it's I wouldn't really even think of that. I would say that we should call it a day when it is done by 11:30. But if you insist to stay back, then it's going to be really, really too dangerous. Uh, and the ones that are playing till the end of the day will likely be playing in the current week expiry, and most likely that will wipe off your account. So pay attention to how which strikes you are choosing, which expiry you are choosing, how the volatility is today, and is it really sensible to stay that long? Ask yourself these questions and then make a well-informed decision. Okay. Because it's always tempting to see a cheaper premium and then you have some cash left, will go on averaging mindlessly. That is the biggest mistake that you can do. Okay. So stay light. My God, look at all this. It's really looking very scary. Averaging mindlessly until no capital. No capital. Yes, that's absolutely right, Pat. Oh, thank you so much. Yeah. Okay, now this looks very, very scary now. I'm still holding the calls, but then it's not much of a loss. Mainly because of very small quantities. Nothing. It's not even 10 percentage of my opening trade. So very small. Opening trade itself was very small deployment only, on which not even 10 percentage means it's even a small deployment. So uh, not much of a difference. Not going to make much of a difference. Just this trade, if it works out and then goes up, will cover the brokerage for the day. That's all. Plus, it's very tempting. No, market is on a bullish run, and then you are buying something of next week expiry with no gamma effect, no massive decay and all. Makes sense to hold for some time and take that small risk. Be a problem. So what's happening here? You see, first a small move, again a long move, then it came, and just going up. Right now, as the time passes, the volatility is increasing. You see that first it was very small, then the volatility is increasing. Again, it came down to this level. So you can see that it's typically what happens as the time passes is the moves are going to become bigger and bigger. Okay, so it's going to be huge swing in the if it is going to be a sideways market. You will not even realize it is sideways market. This is 9:15 and then it will end over here. So the swings are so big that you will not be able to realize it is a range bound market. So watch out for all these things. From 62 rupees, the premiums have come to 20 rupees on the call side since morning. So dirt cheap premiums. I think we should see some sort of pullback. I'm just waiting only for some sort of sudden move from this level. I wanted to clear this box. Wherever it goes, I wanted to clear this box, either side. Then we can call it a day. Same over here. Okay, let the market take its time. I will use washroom and be back. Couple of minutes. Okay, we are back, and it was a great break. You can see that the markets really have gone up, and this is exactly what I was saying. Prithvi, what happened to your questions now? Should be in good profits, I believe. So my brokerage for the day is covered. Everything is done. I think I should just call it a day now. Uh, this is what I said, right? Like the swing will be super big, and it's very difficult to uh, stay unless you have excellent understanding of what's happening in the market. Uh, Otherwise, money will be just like that lost. So uh, you will see market coming down again and then testing it and all these things. That drama will happen. Don't take any sort of crazy positions just because the premiums are cheaper. Uh, Stay light, and I am calling it a day now. Just maintaining some month-end contracts, writing positions alone, which is absolutely safe, and either side it moves, it's not going to make much difference. So this should be good enough. I will end the stream right now, and if you guys have any questions, feel free to ask. The bullishness continues, guys. The bullishness continues. Please keep that in mind. Till where, till which level, at least in an intraday basis, it should not break is this point. That is 21,666, or maybe I will make it little 21,670, right? Should not go that level. Otherwise, this position is absolutely we are in the bullish territory. And similarly, on this side, this one I would consider. It should not break this 48,300. So keep these two things in mind, and then you can play accordingly. So thanks a lot for joining in, and we'll catch up most likely tomorrow. Have a great day, everyone.